Hello students, I am Professor Dr. A.H. Khanolkar. Now I am going to teach you this particular semester the subject called Indian Financial Markets. So first of all, I will just brief the total syllabus that you have to study in this particular semester. Actually, the first unit that you have to study here is the financial system definition, its meaning of financial system, objectives of the financial system, structure of Indian financial system, various issues in the Indian financial system. This is the first unit you have to study. Secondly, in the second unit, you have to study the financial markets. Financial markets, meaning, characteristics, money market, meaning, features, functions, players, and instruments. These all topics you have to learn in the financial markets. This is the second unit that we have to study this semester. Now the third unit, that is the capital market, meaning of capital market, functions of capital market, players and instruments in the capital market, primary capital market, secondary market, and mechanism of new issue that you have to study in the third unit, that is the capital market. Now the fourth unit that you have to study is the secondary capital market. The stock exchange, it comes therein. Stock exchange, meaning, objective, significance of stock exchanges in India. Then the participants in stock market like jobbers, brokers, sub-brokers, etc. What is market making? What is settlement procedure of the stock market? That all you have to study in the fourth unit. And finally, another topic that is for the investments, mutual funds. What that mutual funds is? Definition, meaning, characteristics, structure, functions, various institutions in mutual funds, types and schemes of mutual funds, risk and determination of NAV. All these things you have to study in the last unit, that is the fifth unit. So the syllabus is, a very compact and simple one. And why this particular syllabus might have introduced by the university? The main purpose is to make you acquainted with the financial matters, the lifeblood of economy. Financial markets is a market where the finance is dealt with. Finance means what? In simple terms, finance is money. And market is a place where you can deal in the particular, money. What is dealing in money? You can say buying and selling of money. That can be done in the financial markets. Indian financial markets, the name of the subject. Indian means you well know our country, India, and we have got in India certain financial markets. Financial markets means money markets. Finance means money, I said. Actually, the meaning of finance is that we are providing. What is finance? Finance is money that is being provided for a particular purpose. So that is provision of money or arrangement of money for a particular purpose or the target or a particular business. We can say it is a finance, financial capacity. So that is nothing but, the money capacity or the capacity to spend money, or you can say the financial capacity or financial ability, that is the most important determinant factor of the business. Because you all know that the business requires capital, that is again money. Capital means again money. That is finance required. Capital means required finance. That is required. And then how this finance is dealt with, where this finance is bought and sold. there is one place. What is market? Market is a place where the things are being bought and sold. Generally we say what? Market is a place where the things are bought and sold. Similarly, here financial market is a place where the finance is bought and sold. Well, now we shall try to understand what this Indian financial system comprises of. The whole of Indian financial system comprises of the following. In the first instance, all the financial institutes, all the financial institutions. Secondly, all the financial markets. Thirdly, all the financial instruments. Fourthly, all the financial services. And lastly, all the market regulators. All the market regulators. Now, one by one, we'll just see, we'll highlight one by one. What is this? All the financial institutes. Now, the financial institutes means all those institutes which are engaged in finance, dealing in finance, called financial institutes, as we have learned. Banking companies, mutual funds, insurance companies, cooperative finance companies, and all other non-banking finance companies, etc. All these companies which deal in finance, accepting deposits and lending money. Banking company definition already you studied last time. So all these financial institution comprises the first part of the Indian financial system. The second part of the Indian financial system comprises of the financial markets. Now, which are the financial markets available in India today? Capital markets are there. This capital market. Capital is one, the dose that the company capital, which capital is being raised by the company by issue of shares, or all you studied it, in the previous years, issue of shares and debentures for raising funds. So all these companies, corporate sectors, they raise capital for the purpose of their establishment, and capital being the primary requirement of finance. Primary finance requirement is capital, without which the company cannot run. Two types of capital there: fixed capital, working capital. That all you already learned. Fixed capital is required to purchase the fixed assets, whereas working capital is required to manage the day-to-day affairs of the company. So this capital market, it is a place where the capital is being raised, and the market wherein available is the securities market. We call here Indian stock markets. These stock markets help in accumulating the capital, dealing in the shares and securities, etc., etc. Then secondly, money market, where the money is being bought and sold, money is being circulated. And lastly, a forex market, or a foreign exchange market, where the foreign currency is being bought and sold. So that these financial markets are there. This is the second part of the Indian financial system. Then the third part of the system is the financial services. So these are services like depository services, custodial services, credit rating, leasing, underwriting, all these financial services, and mainly the financial intermediary services are being provided by these institutions. Now, thirdly, it comprises of the financial instruments. Now, the financial instruments are the securities like, shares, debentures, bonds, unit, derivatives, units, mutual fund units, and so on. All these securities that come under the category of financial instruments. Well, after that, financial services, which are the various services being provided by the Indian financial system. There are many such services like, depositories, custodials, credit rating, leasing and underwriting services. They are being provided. And lastly, market regulators. See, the market regulators are the authorities which are established by the central government. Actually, the highest authority in finance is the Ministry of Finance. MOF is the abbreviation. Ministry of Finance looks after the overall control of financial matters within the economy, within our country. It is another important controller of banking sector, you can say, is the Reserve Bank of India. Reserve Bank of India works under the authorization of Ministry of Finance. And this particular Reserve Bank of India in turn controls all the other banks, scheduled and commercial and or otherwise. All the banking sector is being controlled by the Reserve Bank of India. So this Reserve Bank of India, then another regulator, you can say this Reserve Bank of India is a regulatory authority. It is authority wherein it sets rules and regulations which are to be followed by the banking sector as a whole. All the banks and banking companies must follow the rules and regulations of Reserve Bank of India. Okay, and then the next is the IRDA, Insurance Regulatory Development Authority, Insurance Regulatory Development Authority, so that it regulates the insurance business as a whole within the country, and under the authorization of which all these insurance business transactions are being carried out. So, in short, financial system again comprises of various financial institutions, financial markets, financial instruments, financial services, and market regulations. Okay. Well, now this whole of the Indian financial system is broadly classified into two parts. See, which are those two parts? First is the organized part, and the second is the unorganized part. So what do I understand by the organized part? Organized part is that part which is being controlled, and managed by the governmental authorities. The authorities, they are regulating and controlling this particular financial activities. All such activities are categorized under the organized sector, whereas unorganized sector of financial system is that part of economy, finance economy, where the transactions and the things are not being controlled by the regulatory authorities appointed by the government. So now we'll see one by one. So what part is coming under the organized and what part is coming under the unorganized sector, that we will study in detail now. Take for example first the organized sector. So what is the organized sector of a financial system? So we can say, like, the organized sector of a financial system is comprising of the following. So what comes under the organized sector? Firstly, all the regulatory authorities. Secondly, all the financial institutions. Thirdly, all the financial instruments. Fourthly, all the financial markets. And lastly, all the financial services. All these things that they come under the purview of the Indian financial system which is the organized one. Okay, so what we have seen is the organized part of it. Then what comes in the unorganized system of a financial system? Unorganized financial system. Well, in unorganized financial system, you see, lot many money lenders are there without any registration. They lend money to the poor people or the needy people and collect exorbitant or the higher rate of interest than the banking, and they are not coming under any guidelines or any control or regulatory authority. They are not coming under the control of any authority, so they don't have any rules and regulations. They can make their own rules and regulations and do the businesses. Like, which are those? They are, you can say, money lenders, pawn brokers are there, landlords, etc. are there. They also are busy in distributing the land and land surplus land, or you can say monetary transactions also they were engaging in. And the traders, they are there, traders, like even nowadays, many unauthorized bankers, like unauthorized means they are not registered with the Reserve Bank of India. Actually, any banking concern is to be established, it must be registered with the Reserve Bank of India, and it should follow the rules and regulations of Reserve Bank of India. But there are certain bankers and bankers which are not being registered with the Reserve Bank of India, and they are also carrying out the business without any registration, and they have their own rules and regulations. And these bankers are local bankers, they are called as, and these, in addition to these local bankers, landlord and money lenders are there. Then chit funds are there, which are being run without the control of any governmental authority. So all these institutions are there in our economy, and they are running without the control, and so they become the part of the unorganized financial system. In detail, we have to describe the whole of this organized part and the unorganized part for writing the answer of this particular important question. Many a time this particular question is being asked repeatedly in the exams. So what is that? What is the structure of Indian financial system? The structure of Indian financial system comprises of two types. One is regulatory sector, that is organized sector, and second is the unorganized sector. Now we'll see one by one the regularized sector, that is organized sector. In the organized sector, there comes actually first is the regulatory authorities. Which are the regulatory authorities? See, now the foremost important, the whole of the system of France is being regulated or controlled by the Ministry of Finance in India, MOF. And then Securities Exchange Board of India is there, which is abbreviated as SEBI, and the SEBI also controls all the transactions and the corporate sectors transactions in this capital market, all the transactions relating to shares and debentures and other securities, and also the affairs of the company, that is Securities Exchange Board of India. And then another banking sector is being regulated or regulated by the Reserve Bank of India, RBI. It is the father of all banking sector of our country. See, central bank of our country, Central Bank of India or Central Bank of our country is Reserve Bank of India, which manage all the banking sector by regulating and setting the rules and regulations for the working of the banking sector as a whole. Okay. Then Insurance Regulatory and Development Authority. Insurance Regulatory and Development Authority is an authority it is abbreviated as IRDA, which sets the rules and regulations for the control and regulation of the insurance business as a whole. Similarly, there are other authorities set by the government to control various financial departments or various financial affairs, and all these units which are working under the control of these authorities, or you can say um, authorities, they are called as, they come under the category of organized sector of you can say financial organized sector of Indian financial system. Now, after regulatory authorities, financial institutions are there. Financial institutions, if you say, all the banking sector, all the banking sector comes under this particular category, financial institutions, because banking, banking is accepting deposits and lending money. That is, it works as, it works, it controls the flow of money all the time. The bank plays a very important role in the money in the distribution of money in the economy. And that's why all those banking sectors, also non-banking financial institutions, which are abbreviated as NBFCs, they come under the category of, we can say, the financial institutions. Apart from that, financial institutions, apart from these banking and non-banking concerns, there are many such institutions like Industrial Credit and Investment Corporation of India, ICICI, Small Industries Development Bank of India, that is SIDBI, and Industrial Investment Bank of India, that is IIBI, etc. And similarly, there are also some institutions, foreign institutions. There are also some foreign institutions which are engaged in the financial aids, and but they have to work under the control of the government. Also, you can say there are Exim banks. Exim banks means Export Import Bank of India. So it is a financial institution, dealing in finance. It is also being controlled by the regulatory authorities, like Exim Bank is controlled by Reserve Bank of India, of course, and National Housing Bank, NHB, is called the Tourism Finance Corporation of India, TFCI. Again, Infrastructure Development Finance Company, IDFC. These are the financial institutions. Again, National Bank for Agriculture and Rural Development, NABARD, and the State Finance Corporation, SFCs, and the State Industrial Development Corporations, that is SIDCs, are the state level financial institutions which are there, becoming the part and parcel of the regulatory financial institutions. Also, India has established Export Credit Guarantee Corporation, abbreviated as ECGC, and Deposit Insurance and Credit Guarantee Corporation, abbreviated as DICGC, to protect the interest of depositors. These institutions also become the part and parcel of the regulated financial institutions. Further, again, general insurance company and the life insurance company, also the unit trust of India, are various other financial institutions of our country which become the part and parcel of the financial institutions of our country. Then we come to the next, the third one, that is the regulatory third one, which is we can say financial assets and instruments. Now, all the financial assets and instruments which are being used, which are being dealt with, or which are being applied in the financial market here are, you see, like for example, you can say equities are there, instruments, financial instruments like equity share certificates, debentures certificates, bonds, various government bonds, gold bonds, and all those tax-free, less tax bonds, etc. And units of mutual funds, and units of UTI, and also the various insurance policies, etc., being issued. All these financial papers, money in the form of financial papers, all those become the part and parcel of the financial asset, or you can say also we can term it as a financial instruments. Now the next part, that is the fourth part of the organized financial system, is financial markets. Now already we have dealt with, we already know that is the capital market, money market, and forex market. Also recently, in between, over the counter exchange of India has been established to deal with certain securities, wherein the securities are being immediately bought and sold, or the securities are being immediately bought and sold, and the units are being converted into money. Such facilities also being there, and all these markets are there, financial markets are there, which becomes the the part of the financial regulatory financial system. And then comes lastly the fifth one, that is the financial services. Now, which are the financial services? These are being provided in the markets. See, the financial services which are being provided by the banks, all banks are providing the financial services to the many financial services to the customers, and that you already studied in banking. Then in the second market, capital market, you can say, now on this stock exchange, you can say the depositories, custodial services, credit rating agencies are there which are rating the credits, and also the merchant bankings are there, engaged merchant bankers are there. They also provide the financial services. Leasing and hire purchase departments are there. Leasing and hire purchase transactions are there. Guaranteeing portfolio management, underwriting, and many other financial services are there. Those being provided, which are being regularized, and which are being authorized by the by the government control, and these form, all these form the organized part of the financial system. Now, already we have discussed the unorganized part. Unorganized part of the financial system consists of the money lenders, and money lenders are there. Then landlords are there. Local bankers are there. Pawn brokers are there. Chit funds are there. All these financial institutions are there. There are many in the underdeveloped countries, and these institutions run because they also run in the remote areas, particularly in the remote areas where the banking sector is not being developed as such. Well, so to summarize, the overall structure of Indian financial system is broadly classified into two types. That is, the organized one and then unorganized one. So all of you know now the organized sector is one which is being controlled and managed by the authorities, which are there appointed by the government to manage the show of the particular institutions and all of the financial system, of that particular financial system. However, the unorganized sector is one wherein there is absolutely no control of the government. There is no absolutely control of the government, and they have their own rules and regulations, and they run accordingly. And in the countries, underdeveloped countries, also they have got certain importance because they reach the people for their financial needs and help them to do to do or to overcome the difficulties in the financial nature. Well, this is enough for the today's